Good afternoon. What's going on, guys? Hopefully everyone's doing well. We'll get started in a minute. Just reshared the link. Give me a quick sound check as always. And we will get it started. Good morning, good afternoon, good evening. Thanks for making it. See some familiar people in the chat. Quick sound check. Background noise. Background noise is really the only thing I care about. Just subtle enough to provide some kind of ambiance. Good morning. What's up, Dodonna? All good with sound. Cool. All right, guys. Thanks for joining. It's Monday. Let's switch the screen real quick. Good morning. Good morning. Good morning. Just looking up at the chat right now. Okay, Yad, Boov, Dan, Cornholio, Red, Rug. What's up, Samurai? Fintasas, Gazgano, Meaver, T1, Alexander, Feel Softly, my buddy Dodonna, Mehmet, Meaver, Yadvendra. I'm repeating these, aren't I? Anykey, Pushkar, Christian. Christian sounds like an interesting name. Leave the C off. And Chaplin. All right, so we'll give it another minute. I reshared the link. Going to be giving something away during the stream. If you follow me on Twitter, I'm sure that you're aware of what I'm giving away. No one else is doing it right now. There's not many people that offer a similar course either way, but I figured it was time. Okay. All right. So let's get started. Before we get into anything, as a reminder, none of this is financial advice. It's strictly for entertainment purposes only. It's just my color on the markets. I have a very short time frame approach. I obviously have a long time frame approach to markets, but as of the last year, if you've been following me on Twitter, you know that I am we'll say mid-frequency trader. So low frequency would be more position trading, longer term swing trading, and approaching sort of that investment portion of the spectrum. Obviously, I take longer term positions from time to time. I will increase my spot exposure to BTC and ETH depending on where we are, and those are things that I don't touch as much or meddle with as much. Most of the things that I'm talking about on my timeline have to do with trades that take place within either a 24-hour period, a 48-hour period. I'm just trying to convey the idea that they are brief. So they're not brief in terms of like mid-frequency is between high frequency and low frequency. Your low frequency, again, is more of your position trading, your swing trading, your investment. High frequency, obviously, that's like stat arb, low latency, algo trading, and HFT, right? That's what HFT stands for, and that's obviously not me. So I'm in the middle, and that's an approach that suits me. Okay, so if you're not subscribed to the channel, make sure that you subscribe to the channel, hit the like button. We appreciate all of that. Can you lower the background music just a little bit? I'll actually turn it off because it's going to end in about 20 minutes because I picked a playlist off of YouTube. You guys know that I have trouble finding like good non-copyright music. Okay, before we get started, shout out to our partners, my partner at Phemex. So the links are below. It's a great exchange. It honestly, if you're trading BTC now, it has equal or better liquidity than Bybit. I've noticed this in the last week. There's been, it's like 1.1 to 1.5x Bybit's liquidity if you're trading BTC perps. And, that's great because there's a lot of complaints on FTX, for example, and the price action that's taking place on FTX with respect to the majors is not apparent on really mostly any other exchange. And more importantly, it's not apparent on Phemex. It's still offering no KYC. So that's awesome if you really value your privacy. Again, this video is put out to people all across the world. So depending on where you are, there are certain limitations to where you can trade. But they offer spot, they offer futures, they offer yield. And it's just a phenomenal group of people that run the exchange. So if you're interested, check out the link below. No pressure, none of that. If you go on the exchange, you don't like it, just trade where you're comfortable. That's what I do. There is bonuses that are associated with the links below, and they're also running like 10 different promotions right now. So keep an eye on that. And they currently they're offering those promotions. What else was I going to say? They have the betting markets, sort of the binary outcome markets. What am I thinking? Prediction markets. So that's pretty cool. All right. So that aside, I'm going to give something away during the stream. So we're going to talk about Bitcoin briefly, high time frame, S&P briefly, high time frame. We'll get into the intraday stuff pretty quickly. Areas that I would be interested, things that I would want to see, so forth. We'll look at alts. So, there's not a whole lot that's really compelling that's taking place in the market right now, or there are not a whole lot of compelling trades, I should say. But we will take a look at some alts. So if you are interested in alts, leave some in the chat box, and I'll add them to a list, and we'll take a look at them towards the end of the stream. All right. So what are we going to give away during this stream? Anyone who's been following myself or my partner, Rager, knows that we created, this is going back to end of 2018, beginning of 2019, we created Block.Roots. So Block.Roots made a couple transitions in terms of the website and the platform that we used, some of the other content that we included. And I believe it was in the beginning of 2019, we really streamlined it down to things that would be, I guess, perceived by people that are relatively new to markets as a little bit more advanced. But if you're not new to these concepts, you'll know that the curriculum and the course that we put together it's more of a foundational curriculum. So it's a course that'll help you build a foundation in market profile and order flow. There are countless people that I will not name that are really popular in crypto Twitter that have actually started through this course. There are people that went on to trade and get prop positions that first took this course. And there's some phenomenal traders that just took the course because they were looking for maybe a little bit of an edge or some kind of introduction to something that was becoming more popular. And when I say it's becoming more popular, we're talking about, the introduction sort of 2CT of order flow and market profile. If anyone's been around long enough, myself coming from a background trading legacy, trading equity index futures and trading crude oil, using these concepts, trading those. And I originally came to crypto with more of a swing approach. Again, my entire focus was not crypto. In 2017, 2018, there was a group known as PDF. So Pandilla de Flujo, which is basically Flow Gang. And these were people that were also trading order flow. But most people were not privy to order flow. Throughout the years, if you've been on crypto Twitter long enough, you've seen that there's a lot of style drift. People go through every single indicator, every type of, approach, trying to sort of turn over any stone to find some kind of edge, some kind of winning strategy and winning approach to the market. Obviously, the more time you spend doing those things, the more you realize that it's not and this goes back to a saying, it's not the arrow, it's the Indian, right? It's not the bullet, it's the marksman, for a more modern approach. So a more modern metaphor. So market profile and order flow, in my opinion, are the most honest approaches to markets, the most honest tools, I should say. Market profile is just a tool. That's all it is. It's basically showing you the underlying distribution of price in a very clean manner, give you an understanding of context, see whether or not price is balanced, where price is spending the most time, whether we're imbalanced, where value is developing, basic stuff. It's just a tool. It's not a strategy. It's a compression of all prices and forms it into a distribution. So it makes it very easy to read from sort of a zoomed out perspective. Order flow that's how markets move, right? That's how markets move from point A to point B. This has to do with how people transact, the underlying microstructure, how the exchanges and order books are set up. There's a whole lot more that goes into that. Whereas market profile is just a tool when we say order flow, it's kind of a general concept that has a lot of things that fall under that umbrella. People might think of anything from footprint charts to CVDs to the DOM to the tape to even looking at, something like commitment to traders report, looking at basis, looking at, whether or not there's a premium or discount between the futures and spot markets. They might look at, the interest rate components of markets, where we're looking at funding, right? Looking at open interest. So there's a whole lot more to this. But again, it's not like you just have access to these things and suddenly you're a profitable trader. I just think these are the best ways to look at markets. Or rather, market profile is one of the most helpful tools. It's not something you're going to spend a whole lot of time looking at because it shows you things right away. And then order flow is, again, if we're talking about the buying and selling that takes place in markets and moves markets from point A to point B, and again, leaving out, the human behavior, psychology, all of that, leaving out market structure. Well, it's obviously really important to understand positioning and how the market actually moves from point A to point B. And how changes in that behavior, whether or not we're talking about more buyers coming in and less, more effort and less work or less results, whether we're talking about positioning. There's a whole lot that can be gleaned from, again, order flow, which is a very broad category of things. So we created this course, priced it extremely cheap. It's like $49. I think initially it was $39 a month, and then we moved it up to $49 a month. And to be honest, almost all courses are upwards of $500 to $1,000. So I have to say something off the bat. My tweet where I said we were priced 99.9%, that was a hyperbole, obviously, because 99.9% of 1,000 would leave us with a course that was $10. It was a $49 course, so it was priced well out of any other course range. We're talking about in the tails. And honestly, we had a significant amount of subscribers, but it was a course. So we never wanted to keep people, right? We never wanted people to stay on board. And like, if you finish the course, just unsubscribe. Like, you could remain a Discord member, you could remain a community member, but by all means, don't stay subscribed to the course. I used to tell people, like, and this just gives you, I guess, some insight into who myself and Josh are. We used to just tell people, like, hey, dude, if you could finish the course in a day, if you could log on to the course and record the course in a day, more power to you. Like, steal the course, pay for it once, take it off, unsubscribe. Like, we don't want recurring members to stay subscribed to something that is not going to be, like, our point was to be upfront with that. We're not going to be, from time to time, we will update it. We will post live videos. We will hopefully add to the modules, but it is what it is right now. Like, the package was done. And again, like, we put a good amount of time into building it, but that's it. Once it was built, it was done. And if you finish the course in an hour, that's great, right? You're not going to, obviously, because there's like 100 plus videos. Felix, obviously, I'm going to get to where the course is, but there was no incentive to keep subscribers. And to be honest, almost all of the money that I made from block routes, which we're not talking a very significant amount of money, almost all of the money that I made from block routes, I gave away throughout the bull market. So there are many times where, like, there would be Twitch streamers that, name a few times where, like, Kobe would go on and give away a significant amount of money, and I would just give money to strangers. So give money to people that were on CT that were in need, give money to charities that people recommended, give money to friends, right, that I, relationships that I built online, and give back to videos, especially when we did block routes videos. So it's not like, again, we didn't make a significant amount of money from it. And for the most part, I think I gave away all of that money. So let's move on to the exciting part, because I know you guys are probably tired of hearing about all that. But we're giving it away for free now. No catch. And why? I don't know, because, listen, at some point, I just think that things like that should be kind of, the best way I could put it is, I didn't create market profile. I didn't create order flow. Every course that you see, and I've said this many times, like, one of the reasons why I made the course is because I get a lot of questions and I cannot respond to all my DMs. I cannot respond even like 5% of my DMs. It's tough. I'm married. I have a kid on the way. I have a whole life outside of CT. I've always been that way. But I get a lot of questions, and it's not like I don't want to answer these questions. I just can't on an individual level help everybody. So it's finally like, okay, we're just going to make this course, and this should be a really easy thing to give people. And we have to somewhat, if we're going to put in the work, we have to charge something. But now giving it away is because, again, I didn't create the concepts. Everything that you see that's a course is really just, what is it? It's just curated stuff that's publicly available anyway. Like every course that's out there, any course, Bastion, the POG, what does that mean? Unless you're just you're a Marine. Any course that you see out there is nothing's new, right? It all is basically shit that is on the internet that you could find out on your own. It might take you 20 hours to do it, right? But someone is taking that, putting it into, a centralized location, organizing it, adding their spin to it. You have the same subject can be taught by two different people, and you could have completely drastic results between the people picking up on it, depending on the teacher, right? So someone's, ability to convey that information. Either way, I just felt like, all right, it's time to just put this shit out there. We don't need the money. I feel like there's so many people out there that at this point I cannot answer them individually. So I've been silently giving the course away for over a year now. And it came to the point where I'm just, we're going to give it away. That's all it is. So again, it is I didn't even mention this yet, so I don't know why I'm saying it again. If you go to and of course, we appreciate if you use the links in our videos. We appreciate if you check out the exchanges, the things that we highlight, whether it's Phemex, whether, I'm sharing a friend's order flow platform, where I'm sharing a friend's, journaling platform. I appreciate if you guys, if we're giving you something, if you check out the things that we are trying to shine light on as well. But the course is at www.blockroots.com. And all you have to do is go to start learning. So you enter your email address and that's it. And then it's not exactly, so this is on Kajabi. We're going to get to price in 2 minutes. It's on Kajabi, nothing fancy about the website. Here's the Discord entry. But then after you sign up, it's the same page. So all you're going to do is you're going to click on your little icon up here. You could set a picture. You're going to click on My Library, and then here it is. All right. So some basic introduction to market stuff, basics of building a trading system. I want to reiterate that these are the basics. So if you ever want to know what market profile is, why people use market profile, what order flow is, why people use the footprint, this is where, I think that this platform shines, or this course shines. And we have some nuance, we have some setups, but if you've been doing this long enough, you're going to realize that there's no cookie cutter textbook setup. There are a few, but it's going to be you being able to use this, and to be able to develop trades from this after, plenty of screen time and being able to identify nuance. But again, that's it. So I said like a million times. It's free. Check it out. I hope you enjoy it. Leave a review, leave a comment. We appreciate that stuff. All right. Let me look at the chat real quick. Website is down. No, it's not. Type in www.blockroots.com. Yes, this is made by me. So if you listen to videos, that is me talking. All right. Let me just see. All right.
Motion detected at front door.
Okay. Okay. Didn't miss anything. Usually there's some kind of lag, and God forbid, if anyone's been following me long enough, you know how I might go on these long, like what I just did. No script, right? And then I read the chat and it's like, dude, we can't hear you. All right. Anyway. The link in YouTube does not work. For some reason, like if you don't type in www dot, sometimes it doesn't work. I don't know why that is, but listen, if that's the amount of works that you have to do, until we figure that out, it's not really much. Anyway, let's take a look at the chart. First things first, coming off the weekend, let me get rid of my face. S&P, BTC, that's really the show right now. There's not a whole lot, like I said, from an alt standpoint. You know, sushi moved up again. Matic looks like it's possibly breaking out of a descending triangle that we triangle or diagonal that we highlighted in the last few streams. What else is there? There was one other that I'm thinking of off the top of my head. We'll have to go through the charts in a second. But the first thing I want to look at is the S&P. So we'll blow this up. I've been saying the last few streams the same exact thing. This kind of activity down by this low is not uncommon, right? So the S&P, not necessarily like BTC in that it's going to offer some kind of clean retest of a major level and leave that level and do it without much of a fight. A lot of the times the S&P will make it look both ways for a long period of time before ultimately picking a direction. So what I mean by that is like all the back and forth down here, you know, you could look at it day by day and start flipping your bias, right? We break the level, charts are kind of broken. We reclaim the level, you know, it's an awesome reclaim, 2 of the strongest days. Oh my God, we've completely engulfed that. So if that was strong and now we just completely engulfed that, it has to be weak. Oh, we just engulfed all the prior days again. Must be strong. Oh, we just fucking nuked that one day. Like the point is, a lot of times with BTC, you could see something like weakness into a level, right? Whether it's support, you know, grinding to the level, price spikes, and then you have like a 1 or 2 day period where we have this engulfing structure similar to this. And more often than not, that could set your bias right from there. Like you don't end up having multiple weeks of chop around the level without getting some kind of clear move. This is kind of head faking, and I guess that's my point. The S&P, and this is if you trade on the low time frames, you know, it's just all about head fakes. So the minute that you begin to like extrapolate from any move on the low time frame, on the high time frame with any degree of certainty, especially in the current environment that we're in, you just kind of setting yourself up for failure. I think it's good when you have multiple days like this where you have 2 days, 3 days in development forming some kind of range, because ultimately at that point you'll have maybe a clear invalidation, right, or a clearer level of market structure to attribute some kind of change around. So whether we're looking at, you know, the last 2 days, you know, before the weekend as maybe a range high or range low and some kind of significant breakthrough those leading to more follow through, it still sort of lines up with my, as I said, 3,700 level. I just need to see some kind of clean move above there. So chopping around, let me change the ink real quick. Chopping around this level, I have no idea which way it's going to go. But if we get some kind of clean move above 3,700 and then hold 3,700, then I expect this to just kind of fall back into the same behavior prior, where, you know, we re-accept back within the range, play sort of the obvious pivots, midpoint of the range. And then if we're back up here, obviously that is a completely different ball game. If we're back above 3,900, you know, then we could start looking towards 42, 41. But right now there's not a whole lot happening. It's just, you know, semi evidence of strength, completely engulfed, evidence of weakness, completely engulfed. And again, there's not a whole lot that I think that you could take from it. Low time frame wise, BTC still following the S&P. So we'll go to BTC in a second. But again, the last 3 days, I'll show you this on the lower time frame, how I highlighted those last 3 days as like a trigger. The last 3 days right here. Right? So any kind of clean break above 37, 37.25, or any kind of clean break below 35 at this point, I think is likely to have legs. Where we are right now, it's kind of like we're just in the middle of what has been many times before a chop zone. We have some imbalanced days compared to a lot more compression last week, but again, it's not really getting us anywhere. BTC, more importantly, the reason why I just highlight the S&P is because it is something that you should be paying most attention to. Aside from there being, you could make a case for a lot of the forced selling being done with in BTC, and that's why there's been sort of this slight decorrelation on the low time frame. Aside from that, if the S&P were to take a dive or put in any kind of larger move, then I think that correlation would be much stronger again. Bitcoin, prior all-time high level is where we're at. So this kind of 18.9, 18.5, 19, we'll say 20K level, this zone right here. We're testing the prior all-time high, right? We haven't had, except but for one, we had a couple days close below there, but no real significant follow through. So that, to me, this level is kind of becoming meaningless. As I said many times before, and this was before this move, any kind of spike into this level, I would just be careful about. So spike into this level, spike down to low 18s, I would just be careful shorting that or chasing that. And we'll get into reasons why in a second, but it's kind of a meaningless level at this point. You could just see from the last, on a daily chart, like how much has taken place just between this region and how it has meant nothing. So if anything, any kind of move that is committed outside of this significantly, so outside of 18K, outside of 20,600, that's the same level that, again, from the last two streams, I think that's where you start looking for some kind of meaningful response. Any kind of activity within here, while you can take advantage of lower time frame trades intraday, I don't think you could gain any kind of insight into what, I don't think that means anything for longer term positioning or any kind of larger move that would be sustained. Below this low, I think, is honestly something that I would probably sell into. So just to clarify, prior all-time high is holding. This is the low of this entire move. Every other time where we've tested these extremes, and there hasn't been many times, but the other times where we've tested these extremes, it hasn't been the case where we test it and then have a major snapback and recovery. Obviously, I would get behind that if that happened, but I'm honestly not looking to knife catch if we do have a spill into this low. I think that, again, fading would probably make more sense within this region above that low than through this low. I think the chances are that if you break this low, that we see a much larger puke. And maybe that does recover very quickly. But I just think that in terms of managing some kind of position, something like this can flash crash, down to 15.5, 16K. And that's not a crash. But that is a 10% plus move. And I honestly would probably get behind something like that. So if we ended up approaching this low with a significant amount of velocity and again, showing no more response in this region around the prior all-time high, if we no longer showed a response there and we have all that open interest still here and you start to see that there's some liquidations come in, I would just bet on this low breaking and leading to a pretty nasty wick. And I would honestly I would be willing to sell this level. So depending on, again, if I'm right in front of the screen and I could see exactly what's taking place and making sort of that snap decision, I would be willing to sell this level for a brief move, right? So maybe that takes us back down to like 16K. Maybe that even takes us down to 15K. We're not there yet, but it's just, it is something that I think is worth mentioning. This running diagonal, so this is on a log chart. This is on a non-log chart. I do think that this is possibly a good trigger point. If the market has been respecting this line for the last, it only has came to the line. It has only returned back to the line once since this high. And that's the only thing that established this line. But I think if we did break outside of that, it would show some kind of positive drift over time that has been floating up somewhat. And now if we're able to break above like 20,006 and we're outside of this running diagonal, I think there's a good chance you see some kind of momentum come into the market. Over time, structures like this that have painted these kind of clear running diagonals as resistance in crypto have been worth buying, right? And it's not like the first, it's not like the first 5-minute candle is what I'm saying to buy. I mean, I'm sure you get some kind of low time frame response. But if we close outside of that and we see that there is, you know, a firm bid beyond this and price is holding above 20,600, I think the combination of being outside of this level, overtaking a local high in market structure, I think that ultimately you're looking at, you know, higher prices at that point. And then maybe we start playing back towards the tops, the high of the range and the tops of these pivots. But again, we're not there yet. It's not like it's not tradable, but we're not doing anything really on the low time frames. Let's go to a better chart now. So the weekly TPO. Oh wait, before I get into this, real quick, just looking at open interest, since this move back here, right? So from the move 19K up, we had a substantial increase in open interest. And the thing that's interesting is, and this is why I said I think if we get above, what was it, 20,600. If we get above 20,600, we could get a pretty nasty short squeeze. Is this open interest increase? So over time, it's increased, right? Off of this move, even in this move down, right, where we took those lows and we dropped by like 5% plus, there was no real change to this. So if this was primarily from aggressive longs, right, and it wasn't from hedges or shorts, I think that this move down, the break of that low where this began, would have led to some kind of liquidations or some kind of stops being ran. This is a significant amount of positioning, right? So unless this is like someone who just has really low time preference and no pain point that's local, I think that the chances are that this is more likely some kind of limit seller that was filled on the way up and that has been filling across this structure. But they're still in good positioning, right? I think that they're decently defined. If you consider, like, imagine they were filling from here to here, right? And this is the last bit of their positioning. Their invalidation is somewhere up here, right? It's not within their positioning. If they were accumulating a short position or building a hedge within this leg, right, where the open interest increased, their invalidation is outside of that. And as you can see, we haven't even come close to that. And again, if this was like aggressive long behavior and a buildup of retail longing, or, you know, and I don't want to say anything else other than retail longing, because maybe it is one large whale that's buying, but just again has a really wide pain threshold. I think that this move would have caused more liquidations and some kind of decrease in this open interest where it really didn't do much. Like if you're just isolating from these points, so the point where it began, again, we broke that low by, we'll say by the Pico low, by 3%. That closed by, you know, almost 5%, and there was no real change to that. So a lot of times what you'll see is if this was a significant amount of longs building up, or if these were a significant amount of longs building up, dude, honestly, like as we started rolling against that, you would have seen open interest begin to get wiped, right? Anyone who's building this much of a position, or, you know, in aggregate, this many positions building up across multiple traders, you would have seen that as it retraced even part of it, if this was primarily long behavior and it didn't cascade in one large move, that we would have at least had a significant wipe of the open interest. And that's without mentioning that this happened where we completely retraced the move and swiped the other side. So no change to that, which is, again, more reason for me to think that this is maybe someone who is hedging, or the combination of multiple people hedging, and that if the market is above that we start to see some kind of depletion of this based on shorts covering, hedges closing, and so forth. So that's if we get above 20,500, 20,600, which does line up still with the same level that we had from the last few streams. So this, let me change the color of the ink. This low volume region. So again, composite within here, a whole lot of chop taking place. There's some intraday setups, yeah, but I think the bigger swings are above 20,005, 20,006, or below 18K. So anything that takes place within here, I just assume is going to be mean reverting. The last few weeks, I mean, most of our value has been spent between, let's isolate for it again. I mean, the last month plus, right? Because this is September 19th, week of 19th, 26th, the 3rd, 10th. We're going on the 5th week. We've spent between 19,793 and 18,800. So honestly, you do have lower time frame trades that exist locally, right? So it's possible that a break of 18.8 leads us to that 18 level. A break of 19.6 that was used already. Talked about that in previous streams. A break of 19.6 leads back up to the 20,005, 20,006 level. It's possible we didn't use up those trades, but I think we'll get a better idea looking at this. Here's that weekly value now, that gray box. So the levels we have above, and it's, again, I mentioned that it's possible it still exists. We do have more friction this time around, right? So we have this 3-day composite. We have naked point of control right around 19.8. We have a naked point of control right around 20,000. So there is some stickiness ahead of us. So I don't want to say that like a breakout of that 5-week composite on like the 30-minute chart is going to lead to a significant move. I think that the longer term moves are above 20,005 and below 18,000. Intraday wise, one sec. I think there are a few things that are worth mentioning. The daily chart first. So one, weekly open. What are the chances that we don't return back to the weekly open and clean it up a little bit more? I mean, this is our weekly TPO. Opened obviously within last week's value. We have a poor low at this poor low so far. Right here. So we had a weekly open around, what was the weekly open at? Weekly open is at 262, and the low was, $100 below that. So what are the chances that we leave that? And then looking at the daily candle, really nothing at the low, right? So this daily candle, the low is 1958, the open is 1960, so there's really no wick. And if you just go back and do like an eyeball test of the any kind of candles like this within the bear market, it's very unlikely that we don't return back to clean this up. So it's not that you have like equal lows, which would be another good target. It's just that we don't have, this day kind of just opened off of the open, moved down just a couple bucks, but there was really no exploration below that low. So this becomes like an obvious target to keep in mind. If you get the setup, this being a target for some kind of short. Right? Not that this is, and it's possible that you use this as sort of a setup for a break of these lows back down even lower. But if anything, I would look for some kind of setup towards the high of this range that, or even within the last couple days, that uses this as a target. Just open this. So I ended up shorting this morning, and I shared that. I ended up shorting and closing out right around 19,450. So I don't have anything still open. I'm still just very, again, more focused on, I guess, things that most people would be calling scalps, but just intraday momentum trades. But I would look for, and I'm still looking for, some kind of setup, whether it's a tap again of this level, whether it's a lower high fall, a lower high and failure, to take us back down to that 19K level. Because I expect that over time we revisit that. It's not to say that you should just open up a short when a situation like this exists, though. So I think that's important to understand, that this is not just, oh, we should just short because the market is going to come back here. It could come back here after a couple days higher, right? So you can see there's like multiple pivots that have not been retested so far. It's just kind of a messy area that I would expect price to revisit. Now, this move locally, the interesting thing about this is that, there was quite a significant uptick in open interest off of this move. So today, right off of the open, we've seen that this is from the lows around 285,000 to 311. This is not going to be as accurate converting it to USD, but there is like a 500 million BTC increase worth of positioning, right? Now, if you look at this with respect to price action, just locally, look at previous moves, their corresponding increase in open interest compared to this smaller move and much larger increase in open interest. This is on mostly positive funding on the way up. If you look at FTX, it's negative though. Binance is positive. But I think that this is mostly, again, just buyers, derivative buyers getting aggressive, right? Again, just trying to snipe the bottom. So I would just be careful about that. But for the time being, it's still in decent positioning because this is off today alone. And if, normally we would, if you look at positioning come into the market, one of the things you could do is look at something like an anchor VWAP and, tag that on where most of the positioning came in. Today, it's just, it's basically off the start of the day. So you could just use today's VWAP. So above that VWAP, any kind of longs that came into the market for the most part are still in decent positioning. So looking at the VWAP as support, I think is reasonable. A break of like 19.4 starts to put a lot of this positioning, I would assume, underwater. So if you were to start getting slippery, and I think after this first test, it'd be more likely. If you start breaking below 19.4 at this point, I would just look for the signs of slipperiness beginning to develop. And at that point, it's probably something that takes you back down, aside from just today's POC, back down to, again, yesterday's open. The entirety of this day is basically where most of that open interest is isolated to, right? I mean, this is the 17th, and that's what we're looking at. So that's a pretty significant increase in open interest. And again, going from exchange to exchange, most of that is on Binance. So FTX is more, if you look at the predicted funding rate weighted by open interest, FTX is telling a different story than Binance. But Binance is what is most responsible for this increase in open interest. I think that we're just honestly, a lot of people are going to be getting sloppy. And you're starting to see that, right? Just because we're in this stage where the market is not doing anything, historical volatility fell off a cliff. Market is chopping around, punishing both sides that are expecting more. I would just assume that to continue, honestly. As long as we're within the range still, and you see any kind of significant pickup in open interest at an extreme, right? So again, this level right here, 1965, that's our composite value area high. So we're just, at the far, we're, stretched away from value right now, extended from value. You have a lot of positioning that comes in at both sides usually when that happens. And I would just expect that the people that can consistently buy those levels and sell those levels get punished as price reverts back to the mean. Now, there's not like a whole lot to say about absorption. There's actually less buying this time around, less aggressive buying. But still, it's at a range extreme. It's back at the high. This is kind of an area where you would expect price to return to anyway. So this daily wick, looking at the TPO chart, this kind of trend like inefficient day or imbalanced day, I should say, is it's a trend day. It's not like there are any single prints within it, but these low volume areas did get filled out. And we have been over time putting in this pattern of just lower highs and lower highs, which means that we're running back to the local swing highs and then failing. So momentum drops off, positioning begins to get a little crowded, and then we see an unwind of that positioning. Do I make my bed in the morning? Yes, every morning. So, I mean, if you look at this with like momentum oscillators, looking at like the 1 hour chart, as we approach that 70 region on the 1 hour chart, that's kind of been the, well, except for this, turning point for prices. Yeah, I still have the same opinion that this is the market is bottoming. I'm just looking for the best opportunities to get involved. So, my opinion was that we were going to see the bottom tick in Q4. The S&P gave us that. Bitcoin's still holding the level, and it's probably because, honestly, BTC has probably seen most of any kind of forced seller taken out of the market at this point, right? The largest people in the market were taken out. So the S&P has not necessarily had, I would assume, all forced sellers taken out of the market. It's completely different from this market versus crypto versus legacy markets from a leverage standpoint. Obviously completely different. Leverage is more expensive in crypto, but it's more available. I'll just let the chat run for a second. You guys have any questions? So Monday's Monday's so I rarely take trades on Mondays lately. So this one trade that I took, and I'll actually show you guys that trade. So I said that I closed it out, but the market already bounced. So it's easy to say that you closed out a trade after the market is higher than it. But here are my trades. So these are the sells that I shared, so arrows pointing down, and then this is where I bought back. So I mentioned that I bought back around 19,450. So this is where I started scaling out of the position. So it was a quick $200 move. Now this day is kind of ugly so far. So again, into the value area high of the week. It's kind of an ugly low volume region we have within this structure. Right, so you have a little single down there technically. So you have an ugly structure intraday, and then you have, again, just that really obvious bullseye, I think, at yesterday's low. And when I say ugly intraday, this is not bad price action, right? So this kind of progress upward, it's not uncommon to see this as part of continuation. But this with the, again, increase in open interest into the level, back to a level that you would expect price to respond off of, I think it's different than if you had if we're doing this and we're above the prior high. So we could just be, it's kind of silly to say that because this technically could just be part of a leg that ends up taking us there anyway. But let's look at the S&P. One sec. So it's interesting because you don't see, like you do see this, but it's not as abundant in the S&P as it is in crypto. This kind of delta divergence that jumps out right away. So looking at the ES and then looking at the CVD, you have higher high, lower highs, and you have higher highs in CVD. So price action not necessarily reflecting that. So almost like, again, people getting very excited, but nothing really changing as long as we're back within this, as long as we're down within this range between 37 and whatever it is, 30, 36, 35.80, 35.70. So people are buying at the highs, selling at the lows, and we're not doing much. So it looks like we tagged right into yesterday's point of control. The thing that stands out about this is how clean that ledge is, though, right? So you have a ledge right here. I go over that in the course. And you're seeing that in price action, honestly, how kind of clean this level is acting. That's a horrible drawing. But the point is, like, there's no real spike above. It's the whatever is on the other side of this is just absorbing all that buying at that, at that 37 region, at that 36.96 region without much trouble. A lot of the time what you see is that and this is more in BTC, that you see a ledge like this gets cleaned up and then you're left with something that fills this profile out a bit more. It gives you something more like that. And with Bitcoin, you might look at that as a level to take a trade around, whether it's a stop run around that level, a clean up of that level. So as I mentioned, like this is not the best looking based on the positioning that's possibly coming into this on the long side. Could be wrong about that though, right? I think that the thing about flags like this, and this has worked, it works like many times. Let me go to a low time frame chart. At least for short-term trading opportunities, is that when you have a flag that's clean like this, that regardless of what your opinion is, a lot of times when you have a structure that's this respected, if you actually do get the break, right? So we tested the VWAP. Yeah, things look like they're crowding, but maybe this is, again, that seller getting involved, right? So buyers are buying up more. Open interest is going, increasing much more drastically, but maybe that passive seller is still hedging into this or selling. Any kind of move outside of this diagonal, I would honestly take as a lower time frame trade. So something like, for example, a break back above 19,560 puts us above today's value, right? So we're kind of trending for a revisit back up to like 19,680. So a $200 move, $150 plus move. And these are just short-term trades, right? Just brief scalps. Saying brief scalps is kind of redundant, isn't it? So something like this, it takes us back up to this high, and then maybe that gives us that short setup. So maybe we get back up to this high. We see that, through that level. So that's, I'm on it already. Maybe we see that through this level. So the market moves up. Then you get a bunch of buying. That's a horrible work of art. You get a bunch of buying, and then after that trap, the market is setting up back below that level, retesting the underside of this high, and then maybe you have that short opportunity again, setting up back towards yesterday's open. I personally don't think that this looks, so there are, there's definitely something to be said for volatility dropping off a cliff, things being ugly from like a price action standpoint, but I don't think you could look at that and start to make high time frame predictions. I think honestly, this doesn't look bad still from a bottoming standpoint. And again, whether this leads us to something where we end up spiking lower again and then rip up, or whether this leads us to something that just gives us one of those floaty kind of behaviors that people don't even take seriously until we're much higher. Or maybe we do get that spike that nukes this low, takes us down to 15, and then that completely reverses. I don't think there's, either way, I don't think you could be only bearish looking at this structure. Like, yeah, between these different setups, right? So whether we're talking about the break of this low, which I said, I would probably short into this, whether that we're talking about that, something that takes us to 15, or whether we're talking about something that gradually starts climbing higher and retaking levels silently, or whether we're talking about the thing that's puked back towards the low, getting people to panic and then reverses and is now under over higher. Those are all different tradable opportunities. This one offers a more compelling short, but I don't think that this structure looks like bearish, honestly. I think the fact that it's holding up and slightly drifting higher makes me a little bit more confident in we're in a bottoming, we're going through a bottoming period. More confident in that thesis. This is all, though, contingent on the S&P holding. But again, reiterating my earlier point, nothing is taking place down here that should be taken too seriously. Like if we're back above 37, that's great. If we break below 35, then yeah, things change. But this is starting to, I don't know. I mean, if I zoom out, this, so there, what is there, 100% now? The market is pricing in 100% of recession next year. I wonder what that means for the market, right? Think of how certain that is. Gives the market a good amount of time to start pricing that in. So Kingfisher shows that the biggest area is 20,000 to 20,300. And you have the same crazy increase in open interest for ETH as well. 20,000 and 20,300 is, just box that out. Going back to that increase. All right, so what did I say? Squeeze probably around 25. It's probably in progress at that point, but this makes sense. That's a good level for sure. I mean, you could probably start getting more aggressive if the market is able to retake this 20,000 level. But again, my point was like there are some levels that for an intraday trader we would not like write them off necessarily between where we are now and there. So if yeah, I mean if we're above 20,000, that 20,000 to 20,300 level, that's kind of like this composite, honestly. So if I combine these, it's probably going to be the same thing. And then we'll box that out. Yeah, it's actually, that is the prior range up here. So normally, again, if we're looking upwards and we're going in the direction of flow, if we're going to be continuing up, we would expect that, again, 19.8, so 19.793, and then just under 20 are brief areas of resistance. Naked point of control, naked point of control. So if we end up getting above there, the longer trade opportunity exists back within this range. So if that's where a bunch of that, you know, those stops potentially are, and where that's where things definitely start getting dicey, then yeah, the 20,000 to 20,003 trade is there as well. But, you know, the implication from looking at Kingfisher and saying that is that the trade that takes place between here and here sets up the much larger trade that I was talking about between 25 and, you know, 22 or 21 plus. So yeah, maybe it does. Maybe it does start getting slippery here and you want to enter earlier. And there could be a good reason for that because, yeah, essentially we are retaking this pivot that rejected out the underside of that, off the underside of that range. So this would be kind of the W in progress. If you're interested in option stuff, just go to Genesis Volatility YouTube. And Callus, actually, that's funny you say that because, yeah, I talk about options quite frequently. I haven't shared anything options related in in the last month, I guess. Or no, I definitely have. I share skews quite often. I share 25 delta, 30 delta skew quite often. I share the shape of the volatility skew, whether it's a smile or a smirk. I've shared these things many times. I've shared the options chain, looking at deltas in terms of probability for price being at a certain point. So I've definitely shared many things with respect to options. The last options trade I took was, we're going back like 4 or 5 months ago now though. I had puts for 20K and I closed them out way too early. So the difficulty of being someone who starts in the bear market is being able to actually get bullish when things are bullish, because you're going to be kind of kneecapping yourself when the market turns by thinking that we're still in a bear market, right? And that we're in sell the rally mode. And it's difficult for people to transition. So that's why like trading during the bear market is very useful. Screen time during any kind of environment is useful. Any kind of environment other than just a bull market, right? Where it's just easy mode is obviously useful in many ways, like should go without saying. But the trouble is trading too much and getting too accustomed to those conditions and then not being able to adapt to a trending market where you have to give price a little bit more room to breathe. And in a bull market, for example, looking at just the next sticky level often doesn't make sense for all approaches, right? So when the market turns on the high time frame and all trending indicators are green lit, and you have multiple signs of confluence, looking at that next intraday sticky point doesn't make sense for a take profit. It makes sense if you're still trading intraday, right? And for your trading, your intraday approach, or if you're a scalper. But if you're swing trading also, and if you're trying to, gain larger exposure to the trend, that's micromanaging things. I love Sierra. I originally was using Sierra. I used to share Sierra like 2-3 years ago. It's a great platform. It's a little clunky, but I love Sierra. This pen is Epic Pen. So are there any alts? So I actually ended up closing out my ape short. I generally want to see things move faster. So we have this kind of structure that I've been looking at that we obviously have been respecting. We broke downward on bad news, and this market's forgetful. So bad news honestly doesn't mean too much because the market's not, like, people who are involved right now don't give a shit about the SEC. So we had the break of this trend line. We had the break outside of this. Again, this is from a weekly series of closes that we are unable to gain meaningful exposure through. Now we've had to close through that level, but there's really nothing that's taken place after there. So I would be careful shorting ape, even though ultimately my initial target was that we were going to come back down towards this low. If the rest of the market is basing out, I think that ape is something that has a good amount of upside compared to a lot of other pairs that are older. So being that ape is new, I would just be careful getting too overly aggressive on the short side if we are going through a bottoming period. I don't think there's a ton of inventory that this has compared to a lot of other pairs. Let's actually take a look at ape. Market cap. So it is, it's roughly a 3x FDV compared to its market cap. And there's only like a third of the circulating supply out, but that's not that gross, honestly. We've seen way worse than that. This is what I was talking about with Matic, the break of this structure. So if you're looking at a log chart or a non-log chart, it's going to highlight different, it's going to be attached to different regions, but the general idea, the general level is there. So this is the diagonal that I'm talking about. And looking at Matic again on the high time frame, you kind of have this under over that's taking place. So consolidation, breakdown, retest the most important level on the chart, and now we're back flipping in sort of similar fashion that ETH is. So that like 70 to 75 region I think is good support until proven otherwise. If we're back below into this level, right? If we're back below 70, if we break this low meaningfully, I think that, yeah, you could start looking back towards the low of that structure. But this is nicely rounding out right now. It's neutral. I don't know what it is from a funding standpoint, from a derivative standpoint, but it's looking decent, and it kind of looks like ETH in the sense that this prior consolidation is clean. We're just retesting the top of that, and that becomes a level that if we break that level and accept within there, then yeah, you could pretty much just write this as moving from the high of the range to the low. But as long as it's moving along the top side of the structure, I just think it's dangerous to prematurely short it. So honestly, if Matic starts breaking outside of this, if this daily closes outside of this, I would rather see that something is able to put in some kind of higher high and then higher low. And then if you have this structure that's being respected, I would just look back towards this $1 level. Sushi is a good example of something I shared during the last streams. This inefficiency filling out, this level acting as support, but the market's still ranging. So Green Tree or Golden Tree took a $7 million position in Sushi. You had a big pump off of that. You had the dump off of the Horse News, which was absolutely ridiculous. And then a bunch of sellers that were trapped, and we had another move up to weekly resistance. This is still within a weekly range. I expect it to just continue to chop within here. I don't think that any move within here is meaningful. The level at the low is, as I've said, it's like a central bank defined level. It's so clean down here. Normally this would leave me worried, right? Something that clean, but that could just be a very significant entity. That could have been Golden Tree, right? It could have been a bunch of significant entities just building position with limits. But I still think, you're at the range highs right now, unless Sushi is above 160, holding above 160, holding above all these highs. I expected this just to rotate back within the structure. This honestly is the first time though where things look like they're decently transitioning. Lower high, lower high, lower high in the weekly, higher high in the weekly. So really you want to see a weekly close above this level. So weekly close above here, and then that puts in a higher low on the daily, higher high, higher low, and that's a good sign of transition. But all of this, still nothing is going to move on its own without Bitcoin beginning to do the same thing. XRP is at the most important level at the chart, or was at the most important level of the chart, and it acted as a resistance. So I mentioned the last two streams, this is probably a level you want to sell. If you're still holding on a position, if you're still long, definitely a level to start shedding some of that positioning. Not a level I would want to buy. So the original short setup that actually played out was reaccepting back within this close. So the market losing steam back up towards this high, whether it was a swing failure or just absorption back at that level, reaccepting back within this range and tagging that low again. So we got that already, and now we're just kind of hanging out in the middle of the structure. I don't think XRP has done anything different to go on its own bull market march. So I anticipate that for the most part, you revisit these lows again, and then ultimately revisit the top side of this 40, 35 to 40 region. It's very clean down there. We've seen this structure play out before. Back here, I mentioned how this one didn't, this one put in a swing failure. This one didn't put in the extent of the swing failure, but you're seeing kind of the same behavior. Drop off in aggressiveness. I'd expect that this ends up back down at the high of this range. Aave, is Aave even relevant right now? Aave weekly chart. I mean, everything is doing the same thing the last 2 weeks, right? Everything is doing this, compressed to the max. So regardless of what it is, all right, Darl, you've just said too many things. Regardless of what it is that you're trading, chances are that with this kind of multi-week structure being this tight, that a break outside of it is going to lead to an expansion, at least worth joining in the first leg. And the same way with BTC, a break outside of the range and a break of the what has been this running diagonal probably leads to short-term momentum. You know, the market looks like it's possibly turning slowly. So you're going to have more people that are willing to buy when the market has moved higher. And this I'd probably look at on Coinalyze. I mean, that's seeing kind of that's a significant jump in open interest that we haven't seen in months. On negative funding on the way up. So, you know, that's something you would want to see, honestly, as the market's moving up, that this is being faded. You have spot buying, but more importantly, on the way up, you have it being faded and open interest going up. No real liquidations though from the short side, so I mean, you're just starting to liquidate possibly some of these shorts that came in. You can see how that's starting to decrease now though. But anything, either way, so again, I've said this many times before, any kind of clean structure like this, the benefit of it is that it's just a buildup of positioning on both sides. So no one has been able to do anything meaningful with the direction for the last, this is going on over a month. Stops have not been ran significantly besides to the downside. This honestly looks like it's going to break further up. You haven't explored this region yet. There's probably a significant amount of liquidity up here. You have people fading this move right now. It's the first really strong looking move. Maybe this is trying to front run some kind of further move up in BTC and ETH. This probably squeezes higher. And if anything, you're looking at a range that's clean, another clean range. You had expansion lower, consolidation, smaller expansion, tighter consolidation, a break above these highs, 80, 81, puts you back inside the low of this range and probably means this is going to visit the high of the range. So 80 to 90, right? 81 to 92. Again, there's a good amount of absorption right here in the ES, so I would just be mindful of this. I mean, if you look at BTC and the S&P, they're doing the same thing. So whatever happens with the S&P, just expect that BTC follows. And then whatever happens with your alts, or whatever is happening with your alts, just expect that they will follow as well. All right, I'm probably going to wrap it up soon. I just wanted to do this stream to mainly for the announcement for block roots. There's not a whole lot that I wanted to talk about with price because there's not a whole lot that's taking place. This has been kind of a recurring theme lately. There are brief opportunities intraday. Again, I shared those earlier in the stream. There's not a whole lot, right? So the benefit is that like we've been really tight for a while, and it looks like we're approaching a possibly a tipping point, right? I mean, whether you're looking at this funneling on the daily, looking at some kind of running diagonal whether it was at the lows or at the high. Just look at the last few days ATR, look at the realized volatility, look at the daily range as a whole. It's getting very tight. So chances are that we see some kind of explosive move soon. I don't know if that's this week, this day, or that, it could go on longer. We saw 2018, this persisted for quite some time. The most important thing, I think, is to consider that as these funnel, so as this tightens up, whether it's going to end tomorrow or whether it goes on like this, to December, the tighter and tighter it gets, the closer and closer some kind of trigger becomes. So if we are, we're into the first week of November, and then we get a break, any kind of strong move through these levels is something that I don't think you fade. So again, the move towards the low, the move above 20,003, 20,006, depending on how early you want to get involved. After spending this much time compressing, chances are that these are not just fake outs, that these are, 1,000-point plus moves. So whether it's a break of 18K that takes us down to 17, 16 plus and below, or whether it's a break of 20,006, 20,003 that takes us up to like 21.5, 22, high of this structure. The benefit is that even though things are boring right now, which they are, at least the triggers are becoming really tight. Like, you don't have to overthink it. When you do get the strong move through that is on, a significant uptick in volume, has a large range, beyond what is the last few weeks ranges. So looking at something like ATR, it's just not something that I would necessarily fade. Don't want to step in front of the breakdown at 18. Don't want to step in front of the rally at 20,006. Make sense? And I'm going to put out some new pre-recorded content this week. So if you have questions that you're asking in the chat that I'm not getting to, put them in the comment section of the video. So when the video is uploaded, put your questions of things you want me to go into on pre-recorded videos in the comment section, because I will gladly make 5 to 10 minute long videos going into each one of this whatever subject you want me to go into. So whether it's looking at, again, someone just asked, and it's the end of the stream, I'm not going to go into stuff now. Looking at CVDs, looking at, TVL and FTV. TVL and FTV are not things that I really focus too much on. Those are more important to focus on earlier in the bear market, towards the end of the bull market. Right now, it's like we're already months into the bull market. You're probably seeing things closer to fair value. But I will gladly make some short videos for those, whether they're shorts or they're, again, 5 to 10 minute long videos. All right, that's it. Boring stream. Want to do the giveaway. Take advantage of it. Let us know what you think. And I will go live again on Wednesday. Be sure to check out Phemex. The link is below.